Today's guest is Nick Katko. Nick is the president and owner of BMA. For over 30 years, Nick has leveraged his lean accounting experience and philosophy in assisting BMA clients in developing, leading, and coaching them in their lean accounting transformations. Nick has worked with companies around the world, from family-owned businesses to large multinational companies in industries such as manufacturing, healthcare, software, engineering, and service. Nick is an early pioneer of lean accounting. In the 1990s, as CFO of Bullard, Nick implemented a complete lean management accounting system in conjunction with Bullard's lean transformation, which included eliminating standard cost accounting. Nick is a regular speaker at the annual Lean Accounting Summit and has also presented at conferences in the United States, Europe, Asia, and Australia. Nick is co-author of Practicing Lean Accounting and also author of The Lean CFO, which has been translated into Turkish and Italian. Nick is also a regular contributor to the Journal of Cost Management. Here's our guest today, Nick Katko. Nick, I'm excited that you're here with us today. We briefly touched on who you were in the intro, but can you tell us a little bit about yourself, your background, and how lean or continuous improvement is a part of your life?
Sure, Chris. First, thanks for having me on. I'm looking forward to this. I've been practicing lean and lean accounting for about 30 years. Mostly in lean accounting. I'm a certified public accountant. I'm a finance person. And I was lucky enough to be exposed the right way to a lean transformation in the 1990s when I was CFO at a company called Bullard. And I was able to really understand the connections between operational improvement and financial improvement. I mean, we totally transformed the company financially, and there were multiple aha moments for me. And I just said, this thing lean at the time, that's the way everybody thought about it. This is real. It's not just something people talk about. It's not something you read in books. It made me a believer. I then I worked with operations to make the adjustments to our management accounting system so it was aligned to lean thinking. We sort of didn't officially call it lean accounting, but we just did what was natural. And then after about 10 years there, I went out on my own here in Lexington, Kentucky, doing contract CFO work with sort of not really pushing lean, but trying to make improvements, helping smaller companies make improvements. And then my now retired colleague, Brian Maskell, called me. And I had connected with him earlier just via email. And he said, "Hey, would you like to help me out and do consulting and coaching?" I said, "Sure." And so I've been there since.
Well, that's great. We actually had Brian back on a previous episode of the podcast we talked about in our pre-show call. But I think lean accounting is such an important subject for folks to talk, because oftentimes a lot of questions that lean people or lean project leaders get asked is, how does this translate to my P&L, or how does this translate to my income sheet? And there's some nuance that you really need to understand in order to be able to be successful with this. And I'm sure we're going to talk about that in our subject today. Mm-hmm. Before we get started with the interview, can you share with us a quote or a mantra from your favorite lean leader or favorite leader, and tell us why you chose that quote?
I love Taiichi Ohno's quotes, and I know there's lots and lots of them. But one, and I actually use it in my presentation, he says, "Costs do not exist to be calculated, they exist to be reduced." And the reason that resonates with me is, this is coming from Toyota, and people, and I've done some reading about this, and, people talk about lean not being a cost-cutting exercise, which I agree with. But over time, if you apply lean practices the way they're intended to be applied, and you are consistent in it, I think companies have an opportunity to reduce costs over time. And that's different from cost cutting. Maybe we can talk about that later.
Okay, great. I appreciate it. Great quote. I love whenever we have guests that refer back to Taiichi Ono in a true lean spirit here. Nick, one of my goals for this podcast is to help other lean leaders resonate with your experiences. So can you kind of tell us a story about how or why you chose the profession of lean accounting and how that resonated with you?
Yeah, as I mentioned a couple minutes ago, how I was exposed to lean, it made me a believer that lean works, and it's sort of like learning something new. I mean, you could learn how to play golf, or you can learn how to play tennis, and just use golf. I don't golf, but use golf as an example. If you learn how at the beginning of learning how to golf, if you learn the fundamentals of the swing and then just keep applying them, you progress. But if you sort of do it on your own and, I'm going to swing the way I want to swing, who knows what's going to happen. So it's sort of the same way with lean. And it got me really, really interested in also from the, I'm a finance guy, um, being able to explain lean financially and how it impacts companies, because it's different than traditional financial thinking. I think that's what actually keeps me going.
I think I've seen in cases in my experience where you have leaders that have not been given a financial education about general accounting practices in a manufacturing environment or in a business, and they don't fully understand the inputs and the outputs associated with how you count and what you count and where you recognize revenue and where you recognize costs. And one of the things that stands out to me in the past is that someone would say, well, where does this show up on my income sheet? And it's not always that easy and that clear. I know this isn't on the script, but can you talk about that a little bit here?
Yeah. This is yes, because this is very important for lean leaders and companies to understand. You have the financial results, the monthly financial statements, which are produced according to generally accepted accounting principles. And sometimes those generally accepted accounting principles can mask true financial performance. Okay. And I'm going to distinguish between financial results and financial performance. They're two different things. And so the traditional way that you analyze a business is you look at the financial results and try to work backwards. So what you're doing there is all you're doing is trying to tell a story. Lean is about understanding today and making tomorrow better. So you have this disconnect, okay? And there's also this lag between making improvements and the application of lean practices and seeing the financial results. And so again, people have short-term thinking when it comes to the financial results of a company. It's sort of like they want this linear, direct cause and effect. We do something, we see the results really, really fast. So it's about breaking that mindset. And that's why it's important from the lean accounting viewpoint, like you said, introduce the right measures and the right numbers to use so that you can see the short-term operational impacts of lean, which eventually lead to long-term financial impact.
Yeah, and I know you've done a lot of work around balanced scorecards and lean scorecard or lean accounting scorecards, which help equip leaders to be able to explain those to the non-lean folks in the world,
Yeah.
and talk to lean people tend to talk in terms of lean, and they have lean problems and lean solutions. But outside of that small group within the organization, business leaders talk about business problems and business issues and challenges, and everyone has a cost component associated with their performance. And like you said, there can be when you're undergoing a transformation, there may be small changes that you make that have impacts that show up on the list, and sometimes there's an adverse accounting view when in long term it's the right thing. So if you
Yeah.
are adjusting your supply chain, you may have bubbles that you have to pop and you have to go through as you balance out your flow of inventory.
Yeah. The biggest bubble is lots of inventory in a company that is a manufacturing company that begins a lean transformation, because again, this is all just financial accounting. If you start out with high inventory, and if you are going, an outcome of lean practices is reducing inventory over time, which means that the inventory is going to go from the balance sheet back to the income statement, which has a negative effect on short-term profits. But it's got to happen,
Yeah.
and that's one thing that accounting and finance people can, if they're in a high inventory environment, you can prepare the company for that. You can say, this is what's going to happen. Now, the offset, there is an offset to this. The offset is if you are actually serving your customers better because of lean practices, creating more value, shorter lead times, higher on-time delivery, things like that, that can have the impact of generating more revenue. And and basically what you're doing is you're selling more out of inventory without building it. And that sort of mitigates that negative impact. And again, it all can be modeled, and leaders just need to understand that. Here's the interesting thing, which I just wanted to add. If a company is building a lot of inventory, you're artificially increasing profits, but nobody complains about that. It's
Yeah.
only when it reverses.
Well, and I think that for folks that are in environments where someone abnormally shifts and pulls things forward in order to make a quarter in performance look good, at some point you have to pay. Like at some point, you have to pay the tax for that behavior, right?
Yes. I learned that the hard way, and I learned it at Bullard before we became a lean company. If I can tell the story,
Yeah, absolutely.
And this was like early again, like pre-lean, and I had only been there a couple of years. We had a record year, sales and profits. Okay, everybody's happy. The next year, sales were sort of flat, maybe a slight increase. But as we were going through the year, profits were about 2/3 less than the previous year. So that got everybody scratching. And of course, at the time we were on the old standard costing system of absorbing overhead and all this. So of course it was, the standards are wrong, this is wrong, that's wrong, and all that. The end result is that operations played that game that you just described. We had two plants, one main plant here, another plant 80 miles away. Well, in the record year, this plant here overproduced, and they had favorable variances, favorable absorption, which drove a lot of the record profits. But then when sales did not continue to increase, they couldn't continue to produce because actually they ran out of room.
Yeah.
And so it all just came back, and that all, got eventually came out. But that's what that was what, again, I'm fairly young and new in this position. And I'm like, of course, I'm the one who tries to try to explain all this stuff. And it's like, this is just nonsense. There's got to be a better way. And that's why when I was exposed to lean thinking and lean practices, it was sort of like, okay, this makes a whole lot more sense.
Absolutely. I've been in environments where if you don't have everybody measured successfully on the same scorecard, and they have little narrow focuses of where they're at, then you get the behavior that you encourage with your measurements. So
Yes.
An example, I had a manufacturing group, and earned hours was something that was just it was drummed into them. I earned hours. So when they didn't have enough in their manufacturing plan to cover the earned hours, they would run really simple products that had a great earned hour associated with it, and then they would move it over to the warehouse. Well, they're not measured on the inventory measurement, so they don't care. They hit their earned hour target. But when you put everybody in the room together, it says, you realize we have 24 months worth of demand for this product that you keep running, right? And at first they're like, okay, that what's the big deal? All right, go out and staple a $5 bill to every single item that you've got out there that's 2 months worth, and tell me where the cost is, who's bearing that cost. And I think that one of the things that I love about lean accounting is that you try to get everybody focused, pulling in the same direction and looking at the same scorecard, and understanding how we work together and how financially the organization it feels the impact of the work that we do in our small area.
Yeah. What's interesting about what you said and the example you used, the lean practices in general eliminate that behavior. But if others are still using those numbers like earned hours to measure performance, you create a conflict. And so that's really the purpose of lean accounting, is to eliminate that conflict. And what measures do you basically need to stop using or ignore? What measures do you need to use that align themselves with lean operating practices, so that the different levels of people in an organization the numbers are going to drive the thinking. And so if you get the right numbers in place, then you have a good chance of creating sort of uniformity in thinking, which is very important in any company.
Well, normally we talk about what you consider your biggest setback, and you gave us that story early on where young CFO that's responsible for reporting out this variance, and that was a setback. I'd really like to hear what the success or the aha moment was for you. Or like, this is what I'm meant to do. Like, this is my mission in life now. I'm where I'm supposed to do the work I'm doing with the people I'm doing it with. What's that moment for you?
It does go back to Bullard, and it's sort of like when I started, one thing, again, we were on a standard costing system, and we had brought in our new lean team. These were employees. We didn't really use consultants. We hired people with lean experience. And I remember it was time to set the standards for the next year. And there used to be a very elaborate process, and accounting and operations management was, deeply involved in it. And I talked to the vice president of manufacturing, who to this day remains a good friend of mine. And he said, I'm sort of going to paraphrase it and make it simple. He basically said, well, do what you want, because we're not going to use those numbers. He said, here's the numbers I want to use, and you can help me get them. These were more lean performance measures. And that got me thinking. I'm going like, okay, so why are we doing all this? And, again, the way I answered that is, the only purpose of the standard costing system is to value inventory for financial reporting. Okay. So that means, how can it be simplified? And I went on this journey with, again, the people in the accounting function of simplifying standard costing, because nobody really cared about a product cost anymore. So it was like, so we don't need all this detail. So, we made standard costing very simple and easy. It was like one labor rate, one overhead rate, boom, we're done. And, it still valued inventory in total the right way, which is the only really uh, compliance requirement. Generally accepted accounting principles don't say you have to value every every product correctly, inventory in total. So that was sort of phase one. And then as we became leaner and basically had no finished goods inventory, at any month end, finished goods inventory was what was sitting in the warehouse that couldn't go out that day, and it was going out the next day. And I said, why do we even have to have standard labor and overhead rates? And I talked to the auditors, and we ended up going through a process of capitalizing our production costs with a journal entry rather than labor and overhead rates. We set the labor and overhead rates to zero, and voila, life was simple. Inventory in the system was at material cost, and everybody loved it. And from there, that's the way to go.
Yeah, I mean, but what I love about this is that you can't add simplicity in, you have to take complexity out.
Yeah.
And that's the beauty of the story that you shared with us, is that you looked at the situation, you worked with your partners, you didn't do it just in a silo, you had a conversation with your stakeholders, which is, I'm talking to my vice president of manufacturing, I'm working with my auditors to understand how do I stay compliant from that standpoint. And the reality of it is you simplified a system for everybody, not just for the accounting group. It became better for everyone.
Yeah.
And those are the best improvements, the ones that benefit everyone and not just these little pockets of excellence.
Yeah.
Well, I know that I'm going to touch a hot subject here, but that's exactly why you're here. And that's talking about lean or continuous improvement pet peeves. And I imagine on the subject of lean accounting, you have a pet peeve you'd like to share.
About the lean accounting, the only pet peeve is when you talk to people, and it's not just lean accounting, it's also lean. It's like when you get introduced and you talk to people in a business, and it might be a coaching gig or a consulting engagement, or it could just be something like this, meeting people, and you start talking about lean and or lean accounting, and the immediate response is, yes, we're doing it. And it's like, how do you know? I mean, it's like, it's the immediate response, and it sort of just cuts the conversation off because, they're certain of themselves. And I think that's the thing is, if I could sort of say it a different way, it's sort of that the certainty of people in business, that, and I learned that too, also just seeing a lot of lean companies, ones that are successful, ones that think they are successful, but they're not. It's really about more being humble. Meaning, yes, we're making improvements. We are getting better, but there's a whole lot more work we can do.
Yeah.
And it's sort of that opposite view, oh yeah, we got this thing down, or yeah, we know what to do,
Yeah, along the lines of that, I can just think in terms of when people use financial knowledge as a weapon rather than a tool of education for folks. And prime example, I'm having a conversation with a global vice president of manufacturing, and he challenges, "Hey, yeah, I see you're doing all this great work, but where does it show up on my P&L?" And you have to take them through a journey in a polite and respectful way, but say, I know that you're looking for the number here and where I'm circling, but the reality of it is that because you've standardized things and because you've improved the flow, look over here at your percent of overtime cost. Your overtime cost is dramatically dropped, and you have the same. You're looking at your full-time equivalents. I'm looking over here at you're paying 30% less overtime, and people are going home happier because they've succeeded at the day. And you can't put a cost on morale, no matter how hard you try. You can't. But then it has knock-on effects of now, because my manufacturing process is standardized and I know what to expect when I have that, I can plan my maintenance. So now my downtime has gone down and my uptime has gone back up for machine availability. So there's lots of little things that are nuanced that, quite frankly, do not show up at a high level of a 30,000 foot view of an income sheet.
Yeah, and we talk about this in Practicing Lean Accounting, our new book. It's a big part of when I'm doing any kind of training with the company. I say that I have a slide on this. It's numbers drive thinking. Thinking drives behavior. Behavior drives the decisions, and the decisions drive the numbers. And it's a cycle. And what happens, and this is just human nature. You work in a business and you advance, you make decisions, you use numbers to make those decisions, and you become comfortable with them. They're almost baked into your head. You can sort of understand what's good and what's bad. And so you're always looking, like you said, you're always looking for those numbers. So whatever you're trying to analyze, you're going to go to what you're comfortable with and try to make it work. And this is the biggest challenge of a lean accounting transformation, is to get people that have experience in making decisions and using different analyses to look at new numbers and learn how to use the new numbers. That's the challenge. And they don't want to do that, because here's the thing, not all the old numbers go away. So it's sort of like, oh, well, I could do it the old way and do it the new way, just keep that's the hard part.
So, Nick, what do you consider the most important thing that you've learned in your career journey so far?
Most important thing is to understand that I don't know everything.
That's great. You want to expand on that? I mean,
it's, I thought I understood lean in my exposure to Bullard. And then when I started working with Brian at BMA, I got exposed to many, many more companies on a lean transformation. And I learned even more. And even lean accounting, lean accounting is the box score. Put the box score in place, and it really goes back to what I said. You can create a box score and put it in place, but the challenge is teaching people how to use it in a consistent way. So you have to, when you're dealing with people, it's more of a coaching view rather than a telling view. And so over the years, my view of how to talk about lean accounting, how to train, how to explain it's sort of evolved over time. And even the way to explain lean, start with people and problem solving, and don't worry too much, about the technical details.
Perfect. Great perspective. And I appreciate the humility. I think that a lot of leaders could cue off of that humility and realize that I don't know everything. When Bob Rush, when he was on here, I asked him the same question, and his answer was, I have learned that I am the root cause of all of my problems, in the sense that that's all of my problems have one thing in common, and that's me. So
Yeah.
when you approach it from that perspective, it just opens up your thinking. What piece of advice would you give to someone who's just starting out with Lean or Six Sigma or continuous improvement?
Uh, Gain experience, gain real life experience. Books are good, courses are good, but gain the experience. Be part of continuous improvement. Be part of putting in a pull system. Be part of daily huddles and see how it works. Because it's something that is so different than normal business that if you don't get the experience, it's hard then to be able to explain how to do it.
Yeah, I experience is a great teacher. What is it that experience gives you wisdom, and wisdom is gained from making bad decisions through experience.
Yeah.
So that's great advice. What piece of advice would you give to someone who's a little bit further along in their career? Maybe something that someone shared with you recently.
I can't think of anybody who gave me advice. I think it's really just more about continuing to broaden your perspective of things. I mean, if you're, like for me, okay, so, helping a manufacturing company put lean accounting in place, I've done a lot. I've been lucky to do a lot of that. But how about putting lean accounting in healthcare, or how about put lean accounting in a software company? When those opportunities came along, it's a different view, and you have to explain it differently. You can't just fall back on the manufacturing. So I think, and even from a lean viewpoint, if you've done well on the manufacturing side, try to broaden your horizons and understand. Because when we were Brian and I, we had about a 3-year engagement. It was lean and lean accounting at a community hospital in Minnesota. Okay. And that was my first exposure in a non manufacturing environment, really. And I learned more about lean as it applies in healthcare and lean accounting that helped me understand it better from the manufacturing viewpoint. And I never thought that would happen.
I essentially, you challenged yourself. You stepped outside of your comfort zone, and you used your skill set, and you developed that skill set in a new environment, as
Yeah.
opposed to just a lot of people that have experienced your level of success be like, I'm really good at this. This is where I'm going to stay. But you pushed yourself outside, and you grew. And I think that that's great advice for anybody at any point in their career, is that how are you getting out of your comfort zone and challenging your skills to develop them? Well, I know that when I ask you this, normally you would say, "Oh, a favorite book." It would definitely be The Lean CFO, and you are an author. But I'm usually curious about what books are authors reading. So, if you had a book that you could recommend to our listeners, what would it be?
I would, what I think that one of the better lean books on lean that were written is Art Burns' The Lean Turnaround. I've recommended it to other people, especially people that, in companies that want to learn about lean. It's direct, it's to the point. It lays lean out from a strategic point of view. Now, but he also makes the connections between sort of why it's a strategy and, and all these tactics that you have to use. So that was very good, and I still refer back to that. Another one is the Toyota Kata books, especially the Toyota Kata workbook, is really good. And the third one is Lean for Service Excellence by Jeff Liker and Karen Ross, which I refer to a lot. Those are the three books, I think, because you know what it's lean is much more than doing a value stream map and just, and doing Kaizen events. And so when you see how it's applied in different ways, when you see like the Toyota Kata book is all about how do you sort of get, lean problem solving put in place in a company. And that, you have to have people that are coaching people on problem solving. It's not something people naturally do. So all that was really, really helpful. And, reading those books just also influenced the way I explain things.
That's great. I'll make sure to put links to all of those books in the show notes page. I've had Art Byrne and Karen Ross in separate episodes on the podcast. Listeners would definitely want to go check those out. And from a Kata perspective, it seems like Kata is coming up more and more. And I've had some really great Kata coaches and Kata learners as guests on the podcast. And I'm a big fan of Mike Rother's work. So great book recommendations there, Nick. Nick, you and I both know that magic wands don't exist, but if they did, and you could take it and wave that magic wand at any problem you'd like to fix, what would you wave it at first?
I would probably wave it at senior leaders, executives, and business owners that and hope they would open up their minds to understand the opportunities that lean creates for their company. And I don't care what industry it is or how old a company is. And not think of it as okay, everybody else is doing lean, so we're going to quote unquote do lean and check the box, to say it.
Yeah, Art Byrne, you mentioned earlier, Art used it as a business strategy, not because it was something that was a buzzword at the time. He's like, I know that this is the proper way for me to run companies and derive the financial success and the organizational success that I want to build from a leadership standpoint. So he wasn't just checking a box; he was doing the work. Yeah. And oftentimes, he wasn't just sitting in the CEO's office; he was down doing the improvement work side by side with the people that are doing the work every day.
Yeah, lean.
Well, Nick, go ahead.
No, I was just going to say, you approach lean as a strategy or as the strategy, not a strategy, the strategy for your company. And if you understand how it works operationally and how it can improve financial performance, you can financially transform your company with lean. I mean, and Art's proven that, Danaher, a lot of other companies have done that. And, but it requires, like I said earlier, it requires long-term financial thinking, not short-term.
Great advice. Nick, I know that you do a lot of work in lean accounting and with consulting and engaging and software. And there's a lot of tools that you've put out into the world to try to improve a person's knowledge around lean accounting. How can people connect with you if they want to learn more about what you do, or if they have a question about something they heard on today's episode?
Yeah. So the website is www.maskell.com. That's BMA's website, because BMA actually stands for Brian Maskell and Associates, and lots of information there. Blogs, videos, case studies. There's a whole library of stuff you can get. You can also join the mailing list. We do monthly webinars. We have a lean accounting community chat. Mike DeLuca and I, we published a new lean accounting book that came out in August called Practicing Lean Accounting. That's available on Amazon. And actually, you're the first person outside of my wife and Karen Ross that I'm telling this to. I'm actually starting to work on a second edition of the Lean CFO, because again, it's about the evolution of my thoughts. And while I was writing Practicing Lean Accounting, I referred back to that book, and I'm like, huh. And so since I'm in the book writing sort of mind frame. I've started to work on it. It's going to be a second edition that's going to have a lot more information in it and stuff like that.
Well, when the second edition is being book born, reach out to me and let's have a conversation about what people can expect in the book. But
sure,
Nick, I'm grateful for the work that you are doing to help people out from not just a lean accounting standpoint, but from a lean and continuous improvement standpoint. I think the work that you and Mike is doing is fantastic. Thank you for being a guest on the podcast today, and I hope we can have you back again.
Thanks, Chris. I enjoyed it. Have a good day.
You too. I want to thank Nick for being a guest on the podcast today. I know I got a lot out of our conversation, and I hope that you did as well. Be sure to go to the show notes page at leanleadershippodcast.com and check out the links to learn more about Nick and how to connect with him if you have a question about what we talked about today. As always, I welcome your feedback on how to improve the podcast. If you like the podcast, make sure to use podchaser.com/Lean Leadership Podcast and leave a rating for the podcast. Thank you for listening, and until next time, seek progress over perfection.